We got many inquiries over the past year regarding to down payment assistance programs. I'm going to bring these questions to Don today and hoping that we can help more people with this program. Coming to buying a house, many people don't have enough money saved up for the down payment or closing costs. What kind of program should they look for?
Well, there are several kinds of programs that we offer and that are available to first-time homebuyers. They center basically around a down payment assistance program and the closing cost assistance program. And these programs are all developed to try and eliminate barriers to home ownership due to the lack of cash to close. That's been shown over many years that is the major impediment to home ownership. So we'll review those today, the down payment and closing cost assistance programs.
What do people need to do to qualify for these programs?
Well, it's not the easiest program in some cases. We just need to make sure that the clients meet certain criteria. This can be the income, assets, net worth, debt-to-income ratio, purchase price, location, number in the household. There's a lot of criteria that we have to go over. That's why it's important to talk to a loan officer as you're going through this process.
Okay, so do they have to be first-time home buyer to qualify for this program?
Generally, yes. Everybody has to be a first-time home buyer to qualify. That doesn't necessarily mean that everybody in the household or on the loan has to be a first-time home buyer. That can vary depending on the program, but generally these are for first-time home buyers.
What are the current available assistance programs?
Well, there are basically three different levels of programs that we can have access to. This can be the county program, the state program, and the federal program. Most of the programs go through the state. The Housing and Urban Development Department of the U.S. government generally funnels all the funds through the states for these programs, except for one. There's a federal program that's administered by the Federal Housing Finance Agency, what's known as the Affordable Housing Program. So essentially there are 11 different home loan banks across the United States, and they are all required to use at least 10% of their income towards the AHP, or the Affordable Housing Program. The 2022 program is going to start on March 7th. 2022 program rules have not come out, but last year's program allowed for $7,500 towards closing costs or down payment for a first-time home buyer. They also had a community partner program that allowed up to $10,000 towards down payment and closing costs. That we assume will remain the same, and we look forward to seeing what those guidelines and requirements will be. But essentially the borrowers have to be below 80% of the county income limit to qualify for the grant. These grants are not payable back, so they are actually free money essentially. This will enable so many more people to buy a house.
How long do the borrowers need to keep the home for?
Typically, if they keep the home for less than 5 years, then that recapture of some of those funds, it's typically going to be a prorated recapture of the funds that were given to them, and it's generally taken out of the proceeds from the sale of a house. But again, it's prorated over the period of time that you're in the house.
I know that we do have access to this grant, but do not lenders outside have the access to this grant?
It's a limited pool of lenders that do have access to the grant. Generally, mortgage banks don't have access to it, but those that are affiliated with a depositing institution will have access to these grants like we do.
Great. Then what about other programs we have except this one?
Well, we'll move on to the state programs. Generally, the state programs, as I mentioned, are administered through HUD. The distribution of funds are through HUD. And then in Virginia, for instance, we've got what's called the Virginia Housing Program. They offer many different kinds of loans. We're able to do those loans as well, and we're actually a delegated underwriter for these loans. We can do conventional VA, FHA, USDA, or RHA loans. And these are typically combined with a second mortgage, a down payment assistance or DPA, or a closing cost assistance or CCA program. And these typically will equal 2% of the sales price. So for a conventional program, you can get up to 2%, and as an example, if you use a 3% down payment program, then you're left with the 1% down payment. Also, they can be used in conjunction with the AHP program. So not only can you get the grant from the Federal Housing Finance Agency, $7,500 or $10,000, but you can use that in conjunction with these grants from the state as well. We always look at the possibility of doing that for our clients. In addition, there's a mortgage credit certificate that is available for these state programs. This allows a tax credit of up to 10% of the interest that's been paid on that loan for that year. So, for instance, if a particular loan had $10,000 of interest that were paid over the year, then the MCC will allow for a tax credit of $1,000. And that is truly a tax credit. It's a reduction of your tax bill by $1,000, which is an amazing program. And obviously restrictions apply on that as well. These loans through the state also can be used with the county Spark programs, which we'll review in just a moment. Maximum house price on this is $550,000. That is one of the limitations for the state programs, is the home price restrictions that they have. But there are other qualifications that are needed, such as the net income, max down payment, max net worth, max income, number of persons in the household, and other items as well. So it's very important that you know all the details and review these with your loan officer.
So we're talking about the state programs, and then about the county programs, are they any different from the state programs?
Yeah, the county programs do have a couple of additional advantages, and not all counties have these programs, but those that do, I'll use one as an example. The Spark program in a local county to us in Loudoun County, they actually will allow for a loan rate that's 1% below the prevailing rate. So if we do something through VHDA or other first-time homebuyer programs, and they qualify, the borrower qualifies for the Spark program, we can actually reduce the interest rate by a further 1%. So it's a great opportunity to save even more money on a monthly basis. In addition, the counties have their ADU, the affordable dwelling units, as well as the WDU, the workforce dwelling units, that they keep on stock for first-time homebuyers. So if a first-time homebuyer wants to go in and buy a house at a lower price, sometimes those are available. I've got my own opinion as to the value of those, but those are another option within the counties that you can take a look at.
I think people will need to ask a loan officer to see if they're qualified. They cannot just self-determine whether they're qualified or not.
Yeah, and we have people that will go online and take a look at the guidelines and assume that they will qualify for some things, and we want to make sure that we give them a comfort level from a professional standpoint that they will actually qualify.
Exactly. If you have any other questions, feel free to contact Don or myself. We're happy to help, and thank you so much.
Thank you.